Hello, wealthy, successful, money making traders. This is your trader's friend. Thank you for joining me for another video, guys. I'm so glad you can be here today. I started to make this video live yesterday, but as you can see, I put in a lot of take profits because I was just kind of back and forth in front of the screen and busy doing other things. So I decided against making a video yesterday. And it just occurred to me, and this is the reason I'm making this video, that the last video I made, you saw me get my brains beat out by the market. So I would like to make this video to remind you to cut bad trades quickly, because your number one goal every day in Forex is capital preservation. As long as you have money, you can always earn more money. So do not let the margin call on you. Do not let them cut. Do not over trade your account. And I say this because I saw a video last night from I guess he's some kind of expert. And he said that people were cutting their trades too quickly and letting their profits run. And that's why 90% of traders are losing money in Forex. It's like, oh my word. Guys, that is so not true. You saw me on the last video. Most every trade I took that day, I think, ended up as a loss. Every single trade. But I haven't been doing a lot of trading this month. But this is just yesterday's trades. And you can see when you preserve capital, then you can start to build on what you have. So, um, non-farm payroll, the beginning of this month, I lost nearly all of the profits, or at least the latter part of the profit from last month. But when you preserve capital, you always have a foundation to build on. So yesterday, these are mostly yesterday's trades. Most of all of these trades are profitable. So I actually started off, and I'll show you, these two trades ended up being negative trade. Well, I'm sorry, these two trades. So this one and this one. And you can see I lost about 13 pips here and about 14 pips there. And it was pretty much a big deal. So you can see as the day progresses, I am working with different sizes, but they were all smaller sizes than my initial losing size. So mostly all of these trades that you see in front of you, most of these trades are all profitable. So this is the thing. And yesterday I made over 10%. I'm not sure how much more than 10% I made on my account, but I made more than 10% on my account yesterday. So again, I want to remind you, the most important thing in Forex every day is capital preservation. Preserve what you already have. Once you preserve what you have, you can then build on it. And you do that by cutting bad trades quickly. I would love to tell you that I never ever have bad trades, but that would not be the truth. So yesterday I had 3 losing trades. You saw the first two, and this is actually another where I cut myself off because the trade was not going in my direction and I did not want it to further go against me. But eventually it turned around and went in the direction that I wanted it to go in. But because I cut that trade quickly, I was then able to get into other trades that did work out in my favor. So, guys, I want to remind you that you can absolutely do this. You can be successful at Forex. The number one thing, again, that you want to do every single day is your capital preservation. Preserve your capital and then build on that foundation. Have a wonderful, safe holiday. Wealthy, successful friends. I'm making this addition because I realize not everybody has been with me from the beginning. So I thought I'd talk about some of the trades that I took and why it is I took those trades. Before you, you have the USD JPY on the 5 minute time frame. And you can see where I drew an area of resistance and an area of support from the 15-minute time frame. And for a while now, we have been breaking through that resistance, breaking through that support, and coming back into this channel. Now, the green line you see is actually resistance on the weekly time frame. So we're dancing just above this resistance. So it's going to be very interesting to see what happens with this. Now, this is the first trade. You can see all of this bearish price action. But something very, very interesting begins to happen right here. You can see where price is diminishing and the bears are losing strength. So this candle actually opened here, came way down, came back up to exceed the opening, so much so that it totally engulfed these previous two candles. Now, when I put my stop loss in, I did not put my stop loss at the bottom of that candle because it was so far down. I actually put my stop loss at the opening because I felt like if price was strong enough to then come back and take out the opening, then that was not the trade that I wanted to be in. So I got in on this strength. The Bears got tired. They lost the ball. The Bulls came back in strength, stole the ball, went the other way. And you can see how that trade worked out. Now, I want to say this about every trade that you take. First of all, when you buy a trade, you are hiring that trade to make you profit. If that trade fails to do what you have hired it to do, fire that trade. Every trade is just a temporary employee. If you hire a temporary employee for 8 hours and after 3 hours, that employee is not doing what you want him or her to do, fire that employee. Yes, it costs you 3 hours worth of labor, but you save 5 hours. The same with a trade. If that trade does not perform the way that you want that trade to perform, fire that trade. So let's go on to the next trade. Oh, and I want to say this about myself. When I turn on my screen, I don't get into the market simply because the market is open. I need a reason to pull me into the market. And you can see what my reasoning was here. The Bears were losing strength. The Bulls came back, stole the ball, and now the strength is on the Bull side. So that's how I ended up in that trade. The same with the next trade. You can see that price had been traveling for a while. That's another thing that I look for. I look for price to have been moving in the same direction for a while. So I'm looking at the end of a trend. I am looking for one or two things. I'm looking for either weakness in the price or a strong acceleration in the direction of that trend before I start looking for a reversal. Now, I have to get the confirming candle to know that it's actually a reversal. So when all of this strength came up here after all of this bearish price action, I got on board. But my stop loss here was at the bottom of this candle. So if this candle then came back to close that candle, I was out of that market. Now, this candle, as it was falling, I was buying, 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 buying. However, stop loss is right here. So then if it came back to close that, then I was out of that trade. But you see that it kind of flopped around a little bit and then it made a higher low and it worked out to be a very nice trade. Now, this is what I'm talking about. Once price has been moving for a little while And you can see how all of these are kind of consistent here. They're not exactly the same, but they're pretty much in the same range. Then, after a while, you get this gigantic candle that's larger than all of the candles to the left of it. So, for me, that says one or two things. A lot of strength at the end of price movement after prices move for a while. To me, that's a bad sign. It says that we are getting ready for reversal, or either we're about to get into a choppy market. So, strength at the end of a trend is bad. Strength at the beginning of a trend is exactly what you're looking for. So, this is how I took the next trade. The next trade, you can see price is pretty much consistent here, and then you get this huge run to the bearish side. So once price runs like that, it has broken through that area of support, but it did not have a confirmation. So if price ran through this area of support and then came down with another long candle, then I would be looking to short the market instead. But it made this huge run down after all of, technically, after all of this price action. And then it was just pretty much stopped out by this little bullish candle. So it did not have support. I bought here, though, with the understanding that my stop loss was right below this candle. So then the price had come back and taken out the low, which it has done before, and I've had to re-get back into the market. But had price come back to close this area, then I was out of those trades. So after price has moved for a while, I'm looking again for one or two things. I'm looking for weakness in the price, or I'm looking for an extreme acceleration in strength of that price before I start to look for choppy or for a possible reversal. But either way, both of those things are indication that that trend, mini trend, may be ending. I want to remind you that you can absolutely do this. You can be successful at Forex. Have an amazing, wonderful trading week.